Good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Wednesday, November the 8th, 2023. Well, the markets continued to catch a bid for much of today. And again, that was, at least in the NASDAQ, was mostly considered or due to a continued buying spree going on in Apple. And also within a lot of the Magnificent Seven, as they're being called, there was a lot of activity. And that continues to really just propel at least the NASDAQ and somewhat also in the S&P higher. Now, my count is, I'm tried to relabel today, considering that, is it really a five-wave structure higher to complete minor wave A, or is it going to end up being an ABC, which would also then complete minor wave A, in my view? Or is it going to be an ABC that possibly completes the intermediate wave 2? Now, I'm looking at it more as it's a minor wave A, and partially because on an intermediate degree, yes, we've covered in terms of price a very sizable range. And in terms of even Fibonacci, we've now kind of come up to the 50% point. And let me just put that in so that we can reference that. So if I just using what we have is just straight retracements, and you could see, oh, actually here we're cruising up against the 618. It's the S&P that actually is sitting right at the 50%. Here in the NASDAQ, we're getting up to that 618. And again, remember, I'm looking for an intermediate wave 2. What is the most common? 50% to 62%. Well, we're there. So that's why I was saying, it's like, well, is it just going to be a minor wave A, or what I'm labeling as minute? Is that the minor? And this is actually going to be an intermediate wave 2 up here, and partially because the ground covered. So in other words, the price climbing, the price expansion that we've had here is pretty remarkable. In fact, we're basically up 1,100 points from where we began. And so that really starts to go like, wow, are we completing the intermediate degree? And now we're going to get ready to tip over. I continue to really do view it as minor. And again, it is that time factor. If we're looking at the intermediate wave 1, really began at the July high and completed at the October low. Well, okay, so we got August, September, October, to 3 months. And now I've got this in a week and a half, basically, right? That is October the 26th, 27th, depending on which day it actually bottomed. I mean, between the NASDAQ and the S&P. Then, we're looking at a week and a half. I was like, wow, it's been pretty strong. And so I do believe that we're going to get a B wave and then get another C wave. So I'm more leaning towards, of course, the market's going to tell us. But before I can actually even go that far, I've relabeled, regardless if it's going to be an ABC of a minor degree or a 1, 2, 3, 4, 5 up to a minor wave A. I still am leaning more because of the way this all began. I went back and I really was dissecting this initial stage. And I know I put a 1 there and a 2, and then a 1, 2, 3, 4, and a 5. But the fact is that this portion of it continues to extend. And so I did not put the minor wave A up here. And then basically was really questioning whether I should put the minuet wave 5 and the minute wave C, and because the market isn't dropping off. I mean, it started to. Let me drop this down so that maybe it looks a little bit different. It started to, but then it stops and they buy it right back. And they bought it back above 15,400. I mean, that high is just what, 20, actually 17? And they took it back to just below 15,400 this afternoon. And I'm like, wow, if this completed even the minor wave A, and we're going to get this, it should not have brought itself back. But the reason, once again, today it was Apple. But Apple and NVIDIA. And so when we're looking at these stocks, I mean, Apple went up to 183, I believe. Let's see. They've taken it all away. No, they haven't. The high was 183.45. So, yeah. And they did the same way that they came in yesterday, they came in today. They started almost from the opening, where they just came in and they just start piling into Apple. Now, this is post earnings, where they had a miss, where they had not the best forward guidance. It wasn't the worst. And let's be serious, it's Apple. I do not believe that Apple is not anything but a pristine company. And their products are extremely popular all the way down the line. But yeah, it just gets to a point where it's like, the higher you take the stock, the harder it is for the company to support it. And now what I mean by that is that, you have a PE ratio. And if they keep jumping the price of the stock, well, puts that PE ratio a little bit more out of touch with the reality of what's actually happening. So I think there's a couple of things going on. Number one, I think this whole rally phase is typical of a wave 2, but could garner a really strong disappointment. And again, it's being based on the fact that the Fed, according to what some people are saying, they're done raising rates. And so, you better jump in now before everybody else comes in. And plus we got the year end, and plus. I mean, it gets to a point where it's like the market will, or people or investors or whomever will find excuses for, I got to get in because of this. I got to get in because of that. And I get a lot of one-liners in terms of comments about, everybody knows this or everybody knows that. And I'm like, well, really? Okay. But on a technical basis, the market on the hourly chart is not as overbought as it has been along these lines here. And it's more on the 4-hour to the daily. I'm going to take a look at the daily chart, and it's still not. It's getting there, but it's still not. And that kind of leaves open. And not that we couldn't turn and do a B wave from here. I mean, that certainly would, fit. But as we get ready and we open up here, they are opening it a little bit weaker. I think we closed down 22 on that extra hour of trading, and now we're down 37. So they're continuing to kind of put this into gear, and that fits perfectly because, again, what I'm looking for here, if I'm leaving open whether there's a minor A, but let's just say, for the sake of this argument, that it is. We completed minor wave A of intermediate wave 2. That gives us a groundwork that we can work with, that what we should expect for minor wave B. So the first thing that I'm going to do is I'm going to take off the fibs on the retracements, but let's bear in mind what we have, 15,446. That's what sits up at the top at 62%. All right, so take that one off. And now we're going to say that today's high at 16 or 17, that did complete The 5 waves up to complete minor wave C, the minute wave C, and that completes a minor wave A. That's what we're going to go on. So now if we're looking for a minor B wave, it's also going to come in an ABC structure. So what we're looking for development here is an ABC or a 1, 2, 3, 4, 5 A wave, followed by a B wave, which will always be 3 waves, and then followed by another 5, which will be a C wave. So minimally, look, 15,116. Most common for a B wave, we're down into this range, 38, 50 to 62%. So that's 14,929, 14,780, and 14,628. And if I leave this as an ABC, it brings us to back where we could do a flat, where we could come all the way back down, closer to this low, and then rally all the way back up to these highs. So again, that 14,448 or whatever that number was for the 618 of the retracement of wave 1, that remains valid even if we start to come down and we come all the way back down to here, producing more of a flat. Again, getting back up to there and the C wave just seems extremely possible and still within the realm of what we're looking at. Well, we're going into year end, so they're going to want to, everybody's going to want a great close, year end close, et cetera, et cetera. You know, all kinds of things going on to prop up the market and to show your best finish, so to speak. That all can still happen in doing an A, B, C. We finish out the year with an intermediate wave 2 high. And then we're off to the races to start the new year and a very destructive intermediate third wave down, all within the realm. And I'm just kind of postulating a little bit on what we might be looking at, but I don't believe outside of a major event happening of the market just deciding it's going to fall apart and that's it, and they're just going lower. That all of this folly, that's what it was, boom, right, get out of the way, and they just start hammering the stock to produce a quote-unquote crash-like market. I don't necessarily see that. I do think we are getting ready for a B wave down. So, and I think that B wave could be 500, 600, 700 points in total, but it's not going to go straight down. I think it comes down in an A, B, C. So that's a down, up, down type of a move. We'll wait and see. Moving averages, everybody's pointing higher. This is on the hourly, but it's just, you know, just when you get it up there. And then we start to move in the other direction. Now, what will happen to our moving averages? Well, the 200 should start to flatten. And where it does, and this kind of pulls in and goes flat, if it's going to be 14,837, that's going to be like a flashing light. I'm support. Come and get me. Come and get me, sort of be. And that's why I start to use the moving averages. Well, besides what other functions they have, but in terms of what they start coming in, they start to line up with fibs. Here's the 50%. So the 200, if it kind of goes flat, would be just above the 50% marker. And that would fit for a B wave. And then we get a C wave. So that is the NASDAQ. Let's take a look at the S&P. Now the S&P, I did get bold and I put out that minor wave A up here at the top. But notice I put parentheses on both. And the reason that I'm doing that is because, well, I'm going to put it out there as a marker because that's what I'm looking for. But I also flipped the count a little bit differently here, and it's going to be an ABC. And I believe that it just actually counts and works better that way because of what the market actually was doing all in here. It just becomes very difficult. Now, it still could be 1, 2, 3, 4, 5. It could be, but I'm labeling it a little bit different. Either way, minor wave A, I believe, could be right there, which means we start to head lower and work our way through an ABC down. Maybe it takes us another week. Maybe it takes less. I don't know. We'll have to wait and see. And then we get a B wave, and then we got another C wave coming up. Now, here's the one I was talking about. In terms of the larger picture, we just bounce out to the 4-hour chart and open it up. The 4-hour chart, you can see that the 50% retracement coming back up is where the market has been hovering now for 1, 2. This is actually the second day, but it just seems that this is the 4-hour chart. So it's really bounced against 4403 quite a bit. Got above it this morning, got up to 775 or 4408 just about, and then just kind of dropped quickly. So I thought, again, that was the completion point for the minuet wave 5, the minute wave C, and the minor wave A. And I'm kind of leaving it there. But this means question mark. Is that the end? Or do we have one more? And again, if we do, there's a couple of things that I can put in now. One being this. I got to go over to this. We can use the 5 to 1. In other words, we're looking at I'm not sure where it is. Hold on, I got to go down one. There it is. We're going to go up here and then over to here. So you can see again, we have 4410. We're not really wandering too far away from that 50% where we could finish. Should they have one more little rally? Okay. Then this is maybe where you go, 4410. So we have 03 still. And then we have 03, 08, and 4410. And then we do have the equality still at 4432. So maybe we do have one more little leg up, but it's getting stuck right there at that 4403, 4400, 4403 level. It's stuck right there. It's bounced up and down off of that 1, 2, 3, 4, 5, 6, 7 times in the last 2 days. 8th time's a charm, I don't know. But in any case, yes, it could go and put in one more slight new high, maybe even bolster if we get enough, a strong enough push up there to 4432. So that's really the picture here. Let me flip out and look out. Again, let's just check on the 4-hour chart. Our moving averages, everything is rising. But see, that 200 starts to go flat and that 100 starts to go flat. If we do continue to come down, it should produce where the 50 kind of goes flat right in between the two of them. If we continue to rally, even if we get up to 4410 or 4432, it might bring the 50 up above that 200 before they both go flat. Because I am looking, no matter what, we need to get a pullback in here. Even with the knowledge that we got a C wave yet to do, we need to pull back in that B wave first. And that's really about it for the equity markets. The 10-year note auction, I guess, went well. The markets, the treasury markets, gained some speed and gained some upside, which was very necessary to keep a more bullish posture for the treasury market in place. So for now, it remains in place. Gold is taking it on the chin. It has support down at that 1935. But again, longer term, gold continues to carry a very strong upside potential. So again, we're looking at for gold and the treasuries, it's the dollar. And right now, the dollar's kind of still sitting about 105.5. And so the little bit longer term forecast for the dollar is some major downside destruction on the dollar. All right, I'm going to just finish it there. The rest of that talk is really reserved for the Eye of the Storm podcast, so I'm going to keep it there. Next update. Oh, before I forget, let me go over and see what's coming out tomorrow in terms of economic data. So on Thursday, we have initial jobless claims. And then Jerome Powell speaking again on a panel at the IMF, International Monetary Fund. How about that? And then at 8:40 p.m. at night, Philly Fed President Patrick Harker will be speaking. So the only thing we really got early is initial jobless claims. And the next update will be on Thursday, November the 9th.